Good morning. This is the Option Pit AM Volatility Report. I'm Mark Sebastian. I want to remind you we've got our beginning boot camp starting up. Go to optionpit.com/begin camp and we will get you going. It starts the 24th. That's a week from Wednesday, and it is a can't miss. So let's talk about the market. Well, we were up pretty nicely this morning. We've since backed off. You can see the market was up huge overnight, as much as 33 points, and now seems to be waffling a little bit. This is after two pretty decent rally days. We had a nice day on Friday, and we're getting a little bit of follow through today. You can see coming off the weekend, the VIX is down about 15 basis points. Remember, coming off a long weekend, VIX should be up. So there's a significant drop in volatility today, about 1.15 in relative terms. Now, the Russell 3000 is up the most, and you can see the Nasdaq's up nicely, 1.75%. The Dow and the S&P are kind of lagging. Well, why? Well, you have USO, which was up big now, kind of flailing around a little bit, and that's one of the problems that's kind of affecting things. The financials were up bigger. They're not now up as much. Gold is off huge today on a Goldman call. And if you look around at like bonds, you know, they're off some too. There you can see bonds are off. US currency is off after being up pretty aggressively over a couple of days. And you know, not being efficiently priced. I mean, so we've seen a reset of everything back to where it was. Currency is off. Currency's now off, and heading back toward a little more normal levels. You've got you've got gold kind of unpanicking, TLT unpanicking, currency unpanicking. You got a little rally and then a followed by a rally. So, you know, I'm not sure today is going to be huge, but I do feel like we're going to get a couple of days of rallying today. I think that we're set up for something like that, and there's a decent chance that, you know, the S&P might make it 19.25, 1930 before all is said and done. You know, we've been in kind of a bouncy market, and I think that's where we go. Looking at VIX, you can see VVIX is off some, and VIX is off some, but not huge. You know, there's some softness in these products. VIX expiration for February is tomorrow. So there could be some herky-jerky trading as well that could throw things around. But some of the stuff that just kind of got completely tossed, you know, your Facebooks, your Netflix, your Googles, they look like they've kind of found their floors and are starting to recover. Even Apple is starting to look less gross. You know, keep an eye on those financials. They've been kind of flashpoints for the market and a great view into where things have been. And, you know, that's kind of the key to understanding kind of why the market's been acting the way it is. I mean, even Twitter is up today. So on the day, I think we will rally more, and I think you will see this S&P end up over 20. And I think we could see, after a really rough couple of weeks, the S&P do something, you know, negative along those lines. You know, could kind of bounce and the VIX rally here over the next couple of days. Or the VIX sell off and the S&P rally over the next couple of days. All right, folks. Hope everybody has a great day and a great morning, and I will talk to you soon. If you got questions, you can email me, marketoption.com. You can call me 888-TRADE-01. I'll remind you this was for educational purposes only. None of this should be used as investment advice. Consult your financial professional. Options have risk.